All right, so what are we going to cover? First, what are Fibonacci retracements, setting up Fibonacci retracements, how to use the Fibonacci retracements in trading, and tips and best practices. So yeah, let's go to the charts. All right, so yeah, what are Fibonacci retracements? So Fibonacci retracements are tools traders use to identify potential reversal levels. And these are based on key percentage of 23.6, 38.2, 50, 61.8, and 100%. And yeah, these are derived from the Fibonacci sequence. So where do we find the Fibonacci tool? It's over here on the left side. And then we see, in this case, Fibonacci retracement. Here we see also the Fib channel, which is derived from that. We see trend-based Fib time, etc., etc. But I use this tool, the Fibonacci retracement. So when I click on that, yeah, you can just, let's say that I place it here, right? I click on the low that you see, which is here. I zoom in a little bit. Here we see a low, and also make sure that you put the 0 in this case on the high, right? So we have the low and we have the high. So 0 and 1 or 100, whatever you want. What we immediately see is that we see a move to the downside. We see price makes a pullback, and let me grab the rectangle. We see over here between the 50 and the 0.38 level that price basically stops going upwards. It retraces a little bit, and from that moment we see that it goes to the downside. So this is a plus setup if you use the Fibonacci retracement tool, because there is a specific golden zone, and it basically means that if price goes, in this case, down, we always wait for a pullback until it reaches the golden zone, which is between the 0.5 and the 0.382 or the 0.618 level. And that's exactly what happens. And we see then that price goes down. So let's say that over here we see price reaches this level. We can take a sell trade when we see, for example, a bearish candle. Here we see a bearish engulfing with a big body, and then we grab the short position tool. We place our stop loss, let's say, above this small high or on the 0.236 level, and then we can target a 1 to 1.5 risk reward ratio trade, which is here. We risk 1% and gain 1.5%. And as you can see over here, I have also a few other levels. I have the 1.27 and the 1.681, and even lower I have the 2.61 and the 3.618 and 4.223. 4.236, that's it. So these are levels that you can use for targeting, right? If you're looking for a TP level, then you can use these to take some profits, for example. So here you can, let's say, take out 50%, or here this is just 50%, right? At 1.5 risk reward. Then here we can take out 25%, and then here we can just take out everything, right? And we see that eventually it reaches this target. But this is an example of a typical nice Fibonacci trade. Let me show you another Fibonacci move. Over here we see a big move to the downside. We grab our tool and we move it to the high, right? So this is our latest high, this is our latest low. And what do we see over here? This was the golden zone, right? And we see that it respects not entirely the golden zone, but it does respect the 0.236 level, and that also matches a support, which was here it was a support, and now it becomes a resistance. And then we see that it nicely goes to the downside. And yeah, so this was, if you took a sell order, for example, here, because here we don't see any rejection, right? It goes straight up until we see here two bearish candles. Let me zoom in a little bit. We see two bearish candles. We yeah, let's say we put it here, and then we take 50% of the money out here. So this is a nice profitable trade. All right, let me go to the next example. Over here we see that this was a lower low, right? Because this was a low, then this is a lower low. This was our latest high, and we again see that it respects the 0.236 level. Again, we see bearish candles, and then we can take the sell. Let me see now. From this moment here, it becomes interesting, because what do we see? We see a move to the upside, and this breaks the latest high, which is here, right? This breaks the high, price comes down. What do? We grab our Fibonacci tool. So this was our low, right? Our latest low. Let me see here, and this was our high. So I zoom in a little bit. Okay, so this was our low, this was our high, and what do we see? The golden zone, and it reacts to the 50 level. Put it a little bit here because this is the high. All right, yeah, it respects the 50 level, and then we see bullish candles, and then we can easily take a buy trade. And let me see the levels. So this was a 50% level. I mean, you took profits, let's say here, 50%. That's the buy. Let's say here you take a buy. You can place it here. Stop loss. So this was a 1-to-1 risk-reward ratio trade. You took 50% of the profits, and here you just take out the rest of the profits, right? Let me show you one other example. Here, this is a high, and this here is the low. So again, here you can see it clearly. This was the latest low, this was the latest high. Yeah, adjust it a little bit. This was the latest low, this was the latest high. Price comes down, and what do we see? Yep, all right, what do we see? Price respects this area, and from that moment we see bullish candles coming in, and then price moves to the upside. Over here we take 50% of the profits, and over here we take out the rest of the profits, right? So this is basically how the Fibonacci retracement strategy works. You wait for a move to a specific direction, and over here it makes lower lows, right? So we are in a downtrend, and from this moment here we make higher highs. So that means that we're in an uptrend. You pull out the Fibonacci retracement tool, and then you grab the highest point, you grab the lowest point, and then you just simply wait for it to respect the 50 level or the golden zone, which is near the 50 level. Sometimes it comes down a little bit more, So that is why you do not always just keep randomly buy at the 50 level, right? You just wait for some retracement to kick in this case buy candles, bullish candles, and then you buy. What you can also do, you can just combine it with, let's say, the RSI indicator, which is here, and yeah, which is over here, the RSI. What you do, you can use this in combination with the RSI indicator. For example, this was the latest high, right? This was the latest low. We see price goes to the upside. Over here we see that it respects this level, which was again also a old support level, and it breaks the support. Now it is a resistance. What you can do, you look at the RSI, which is here. This is the highest point. Over here we see that this was a high level, but we see that the RSI high is lower than this RSI high, right? This means that there is a divergence, and if there is a divergence, it's an indicator that, yeah, we take in this case a sell trade. And so yeah, you can play around with the RSI indicator, that in this case, yeah, shows you a divergence move, and divergence is quite, yeah, good trading strategy. So if you're more, yeah, interested in that, just check out videos that I will create on that topic. So if you do not understand it at the moment, it doesn't matter. Just yeah, wait for more trading videos. But yeah, again, this is a nice trading strategy that you can use. Simply divergence trading with a RSI in combination with a yeah, Fibonacci retracement strategy. For example, we see the same appearing here. This was our low, right? This was our high, our latest high, our latest low. Here we see that this was a high, right? So it respects the, yeah, 50 level, the golden zone level, and this was our high on the RSI level. This was our high on the chart level. This was our high on the chart level, the previous high on the chart level. But over here we see that our high on the RSI level is lower than this high. So again, we see a divergence, right? We see again a divergence. This is called a hidden divergence, which means that we just move with the trend. You also have a regular divergence, which is more like a reversal, yeah, strategy. Of course, it is also, yeah, it depends on if you trade in a overall bullish or a bearish trend. But in general, it is this is a hidden RSI divergence setup, which means that we go with the trend. And yeah, so this is something you can do as well. Just combine the RSI indicator with the Fibonacci retracement and just wait for break and retest setups. And yeah, this way you can make money even if, yeah, price goes down and if price goes up. All right, so if you like this video, give it a thumbs up, subscribe, let me know down below in the comments, yeah, if you like it or didn't like, what I can do better, and I see you in the next video.